Bitcoin just moved almost 8% higher in a matter of days, and it wasn't random. Three separate forces collided at once to produce this explosion, and by the end of this video, you'll understand exactly what triggered it, and more importantly, whether it actually changes anything for where Bitcoin goes next. So what happened? In August 2026, following the US Treasury's bond buyback, three things lined up together. First, a healthy injection of liquidity flowed into the financial markets. Second, after weeks of relentless selling that pushed Bitcoin to new lows near 58,000, bearish bets had become dangerously concentrated, and that set the stage for a historic short squeeze. Around $1 billion in shorts were liquidated in a single hour. And third, growing regulatory optimism has been pulling institutional ETF flows back in. Let's look at the clues that were sitting on the chart before this move happened and what they tell us about where Bitcoin goes from here. We'll start with the post-analysis. Not long ago, it looked like a double top might be forming, with two highs printed on 15 June and again a month later on 21st July. We said at the time this wasn't a valid setup until we saw confirmation, and that confirmation required a lower high. When a low formed on 1st August, it genuinely looked like that pattern might be building. But here's the takeaway every trader needs to hold on to. Never fall in love with your analysis. Trade what you see, not what you think. The moment the 21st July top was taken out, that double top formation was completely invalidated. And if you look back at the swing structure, the signs were already there. From the yearly low on 1st July at 57,756, price rallied to a weekly high on 21st July at 66,882, and the pullback from that range into the 3rd August low was shallow. That was buyers signaling that they were prepared to defend that area. We knew that breaking the 21st July top would turn bullish because it would confirm a higher high and a higher low, a genuine weekly uptrend. And on the lower time frames, we clearly saw price compressing tighter and tighter, and a volatility burst in one direction or the other was imminent. So now that the explosion has happened, does this mean Bitcoin has found its bottom? Here's the reality. This move hasn't changed the structural framework Bitcoin is sitting inside. The August rally has simply filled the price gap left behind by the late May and early June decline, as expected. What's actually been controlling Bitcoin for 7 months now is February's dominant range. We tested the upside of that range back in early May, peaking at 82,791 on 6th May before sellers rejected it, and we tested the downside of that same range when this year's low formed on 1st July, and buyers stepped in there too. So far, this rally has filled the gap from that rapid late May, early June decline, but it still hasn't broken the May high. Price action remains contained inside that same February range. On the upside, our current Fibonacci resistance zone sits around 80,000, specifically between 79,806 and 80,328, but we don't think that holds. What looks more likely is that this rally continues, sweeps the liquidity resting above the 6th May high, and finally breaks the 1st February high and pushes on toward 85,000. Here's a way to think about why. Markets are efficient. Go back to late January. A high on 28th January was followed by a rapid, unrelenting selling into the 6th February low, and that drop left behind a price gap that caught buyers completely off guard. What we're watching now looks like sellers' revenge, the market completing the mirror image of that move, this time catching buyers off guard on the way back up. But don't mistake this for a change in our bigger picture view. Our medium-term outlook for Bitcoin remains bearish. We still see one final liquidity sweep ahead, part of the higher time frame ABC correction we laid out in an earlier video. If you haven't seen that one, it's worth going back before this rally plays all the way out. That final sweep to new lows is exactly the kind of move that could end up signaling Bitcoin's actual bottom, setting up a long-term buying opportunity before it explodes far higher in our long-time bullish outlook. So what's your call? Does Bitcoin keep this rally running, or has it already peaked here at our Fibonacci resistance? Drop your Bitcoin comments below. Don't forget to subscribe for daily crypto chart analysis, where we focus on Fibonacci, market structure, and price action, not hype. We also publish a daily crypto trading newsletter, just a 5-minute read to keep your finger on the crypto pulse. Thanks for watching, and we'll see you tomorrow in tomorrow's crypto trading analysis.